It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're taking a look at two AI players in big tech, both of which recently delivered their quarterly results. And joining me now is Melissa Otto, head of TMT research at Visible Alpha. Thanks for being here. We're all set now. So let's talk about the stock that you are more bullish on in this universe, first of all, and that is Microsoft. Microsoft, of course, has risen over the past year and rose in response to its results as well. And you like it in part because of the demand that we are seeing for the cloud business, for Azure. So talk me through that.
Thanks for having me on, Julie. It's great to be here. It's been an incredibly exciting, I would say an incredibly exciting earnings season. Microsoft, based on Visible Alpha consensus, delivered a quarter either in line with expectations or on many counts, I would say they beat expectations based on Visible Alpha consensus. And then looking ahead to their guidance beat expectations on multiple counts based on Visible Alpha's consensus. You know, as we look into some of the details around that data, what has been really interesting is that company management has said demand for the Azure business has been exceeding capacity and that the company continues to take share in the space. That's a great place to be in this current environment. Based on Visible Alpha consensus for the Azure business, that business was actually expected to generate about $94 billion in revenue in 2025. Now it's expected to generate $96 billion. So just in, kind of pre-quarter, going post-quarter, just in a matter of a couple of days, the sentiment around that business is already ticking up, suggesting that there is some optimism building into those numbers and those fundamentals. And I think, as we think about the risks to that business, looking around what could actually drive demand, what is driving demand, it's all about AI.
Right. Well, let me interrupt you there because we've got the strong Azure outlook, which you talked a little bit about as well. But I do want to talk about how AI is reading into all of this, because what's interesting about Microsoft is there's demand for Azure services because of other companies training their AI, and then there are things that Microsoft is doing, offering its own AI services. So it's sort of benefiting on two different fronts.
Indeed. I think the crux of the Azure business and demand for that is really about demand for public cloud and the solutions that are around that will enable the AI to actually happen within organizations and institutions, enterprises. One of the things that CEO Nadella called out in the earnings call was talking about the cultural transformation that companies have to make to get through this. And this is really one of the potential risks, is that cultural transition may actually take longer than companies are anticipating as they embed those methodologies, train people, and really think about how generative AI is going to be embedded in their workflows.
Gotcha. So maybe it's going to be a little bit more slow than anticipated. So overall, you are bullish on Microsoft, but with that caveat that maybe that cultural transformation will be a little bit slower. So let's get to the stock that you are more bearish on in this universe, and that is Meta. Now, Meta, like Microsoft, has done well over the past year. In fact, has outperformed Microsoft over the past year. But in reaction to their earnings, of course, we saw a decline. A lot of that has to do with what they predicted on expenses. So that's something that obviously caught your attention.
Indeed, in line with this exciting earnings season, Meta, they delivered a quarter that was broadly in line with Visible Alpha consensus. Looking ahead to guidance, it was mixed. On the top line, they delivered in-line guidance, but on the expense line, based on Visible Alpha consensus, it was higher.
Yeah.
And I think that combined with commentary from Mark Zuckerberg saying that this is going to continue for a while, it suggested that the year of efficiency is potentially over.
Right.
And so as we look at Visible Alpha consensus numbers for the expense line, right now, that the expenses are expected to be $96 billion this year, but to jump to $119 billion by 2026 based on Visible Alpha consensus. What's interesting about that $119 billion number is it ranges from $110 to $126 billion. So it means there's a $16 billion question mark out there about what Meta can actually do with their expense line. And so I think that's something we're watching very closely.
Yeah, investors want that predictability, right? And it's AI that's about this. Draw the contrast for me between a Meta. Microsoft's spending more on AI too. Alphabet is definitely spending more on AI. Why is it a bad thing for Meta? Is it because of that unpredictability?
I think it's this, in terms of expectations, the expenses have ramped faster than expected, number one. And then you have this huge range in terms of where the expenses may actually land. I mean, I think going over the next couple of quarters, what would be ideal is to get much more visibility into what those expenses will actually look like rather than some nebulous comments from senior management. I think we would like to know, okay, they are going to be higher for longer, but actually how much higher? What are when does the rubber hit the road in terms of what those numbers will actually look like? And what can we anticipate so that it will be much clearer in terms of what that range should actually be?
Right. Right. All of that makes sense, wanting more. But as you said, you anticipate total cost to rise. On the flip side, maybe it'll come in on the lower end of that. I mean, or maybe it'll be more clear what the ROI is from this money that they're spending.
Indeed. I mean, we would like to see, okay, they're spending this money. What do shareholders get in return for it? I think there are some open questions around that.
Yeah, definitely so. So more bearish on Meta, more bullish on Microsoft. I'm just going to run through and summarize what you are telling folks here. So you're more bullish on Microsoft. It delivered a very solid quarter with the Azure business. The outlook for that business looks strong. On the other side, you are more bearish on Meta because of that big increase in expenses and the uncertainty around what exactly they're going to be. Thank you so much for being here, Melissa. Appreciate it. And thank you for watching Goodbye or Goodbye. We'll be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.